My name is Chris Grisham, and I'm a reference librarian in the Business and Economics Department of the Los Angeles Public Library. Today, we are conducting a program on homeowners, renters, and automobile insurance. As our guest, we have Brenda Coloca, Outreach Analyst, Community Relations and Outreach Branch of the California Department of Insurance. Brenda Coloca brings over a decade of dedicated public service experience at the California Department of Insurance. As an outreach analyst, she manages efforts in the 26th, 28th, and 33rd and 35th Senate districts. Brenda plays a crucial role in educating and empowering consumers to navigate the complex insurance landscape. Under the leadership of Commissioner Ricardo Lara, the California Department of Insurance stands as California's largest consumer protection agency, focusing on insurer solvency, licensing agents, and brokers, conducting market reviews, addressing consumer complaints, and investigating insurance fraud. At this point, I'd like to transfer our program over to Brenda Coloca.
Thank you for having me and giving me an opportunity to come and share some great information that I'm sure that everyone will be able to find useful. I'm going to go ahead. I know, Chris, you kind of went over kind of the basics and the roles. I'm going to cover a little more about what the commissioner's role over at the California Department of Insurance. I think one of the biggest things to note is that we are a government agency. We are not selling or promoting a particular insurance company. Our main priority is always consumer protection. CDI, which is also, you'll hear it a lot interchangeably, and it's really the California Department of Insurance. We regulate the insurance market to protect consumers, such as yourself. So if you've had homeowners, renters insurance, life insurance, and some of the health insurance, we tend to help in regulating. Another thing that, as Chris mentioned, we do set the standards for agents, brokers, so they do have to be licensed through our department. So not just randomly anyone can sell it. They do have to pass the test and get licensed through us. We do resolve consumer complaints. We do investigate, as you mentioned. We do have a small police department that does that, and we work with the DA's office to help with prosecuting those cases. So it's very important that you as a consumer, whenever you're experiencing fraud or scams, that you reach out to our department and ensure that you're reporting those instances. While we cannot require, it's important to note that we cannot require insurance or compel insurance companies to sell insurance. They are not like a utility company where they have to or mandated to service everyone. Insurance companies and agents, we can't regulate them or enforce them to actually provide insurance. So that's important to note. And also another thing that is important to note is also the restrictions that the commissioner has. His main role is to enforce state regulation and laws that have been passed. It is not under his control or role to actually create or impose new laws. So that's where he is restricted, that any laws that are to be proposed or passed does need to go through our legislative branch. So those are some key things to note. Now, I'm going to kind of just go ahead and dive into what we know as homeowners insurance. So anyone that's either looking to purchase or already has a home, we always encourage you to kind of look at these coverages. And worst case scenario, if this is something that coverages that you're unsure of what you really have in your policy, sometimes looking at policies can be a little intimidated and can be a little complex for individual that doesn't know anything about, the terminologies and just what the specifications in a policy are. You can always call our department, and we have specialists that are available to help you read your policy, go through your policy so that you understand it. So you never have to feel overwhelmed by it or really feel intimidated. So we're going to look into a typical homeowners insurance policy. It's also known as a HO3, and it's broken down in terms of different sections and coverages. So coverage A really focuses on the dwelling component. So it provides major property coverages that protect your house and attached structures. So if it damages by a covered peril, then it will go ahead and be covered. And a terminology to actually keep in mind, a peril, really simple, is a term that it's used to describe the type of effect of it. So, for example, a fire, storm. So that's what you'll hear apparel used as. So when you think apparel, you'll think about what type of effect caused or the disaster. We have coverage B that really covers the other structures. So it protects the structures on the rest and the premises that are not attached to the dwelling. So these are fixtures that are not necessarily attached to your home. So such as a detached garage, a tool shed, an ADU, anything that's aside of, it's what it covers. Coverage C is a personal property. This coverage really focuses on providing protection for the contents of your home and other personal belongings that are owned by you or your family members who live with you. This is like furniture, items as such. You may, if you want to cover like jewelry, collectibles, antiques, you may actually have to look for other types of coverages to cover this. It's typically not covered under coverage C under personal property. The next coverage we have is coverage D. This is the loss of use. And this coverage usually helps with additional living expenses in your home. If it's damaged by a particular peril, it's insured against to the extent that you can't live in your home. So that's where this coverage will step in. These expenses will include, but are not limited to, housing, to meals, and even warehouse storage. Then the next thing we have is coverage E, personal liability. And for this section, the homeowner's policy usually provides coverage in the event you or a resident of your household are legally responsible for an injury to others. So this normally provides defense and will pay for damages as the insurance company actually deems appropriate, of course. There are some exceptions. The liability coverages will not protect you in all situations, such as in International Act or all of the exclusions specified language that can be found in your policy. It's important that although I'm going through general coverages, that you do pay attention to what your policies have, because they may indicate that there's exclusions to it or it's not included. So it's important to note those things. The next thing we have is coverage F, and that typically is medical payments to others. So this coverage pays for reasonable medical expenses for a person's accidental injury on your property, but it does not apply to injuries to those who reside in your household. And it's not substitute for health insurance either. So there's some things to note on that. All of the exclusions and specification language are found in your policy, and they're going to vary policy to policy. So it's important that you're speaking to and working closely with your insurance company, your broker, or your agent that's helping you really protect your assets and protecting your financial needs. And it's trusted, right? The next thing I'm going to be covering now is the perils that are generally covered and not covered by homeowners policy. So typically, covered by homeowners policy are damages caused by fire, lightning, windstorm, hail, explosion, riot or civil aircraft, vehicle, smoke, vandalism, theft, and a few more. Perils that are not generally covered by homeowners policy is damage caused by flood, because of course we have flood insurance, which I'll be covering, earthquake insurance. We have other policies that cover. Unfortunately, earth movement, there isn't any coverages for that. Uh, there's no insurance companies that are insuring that. So that's one thing to note. Termites, water damage caused by seepage or leaks, mold, and the list continues on that one. And that's just to name a few. Now, it's important that when you're having homeowners insurance that you understand what you're being covered for, also understanding what those coverages are, but most importantly is determining whether or not you're fully covered. We've seen various reports that actually indicate that up to 8 out of 10 homeowners are underinsured. And simply put into context is a total loss. They can have a total loss of the home, which may cover the value of the home, but it won't be enough to cover the rebuilding cost of the home. So those are the two different things that you do need to take a look at when looking into coverages. So some of the reasons why you could be underinsured is because your rebuilding cost, the labor, some of the things you're looking into is the permitting process, especially for the older homes. They've been grandfathered in through a lot of new regulation that as maybe local cities have passed. So, currently a lot of homes don't have. A good example are sprinklers in their homes, right? That will help with fire. But in a lot of the new modern homes, they are required to have interior sprinklers to help put out fires. Now, so if you experience a disaster, your home is, completely ruined and demolished, then the required to rebuild will probably cost you a little more depending on building codes and regulations that are placed since your home has built. So those are things that you want to consider, maybe start looking into to ensure that you have enough to rebuild in case a disaster does take place and there is a large effect where you were required to rebuild your home from foundation. So that's important to know the actual cash value versus the replacement cost of policies that will pay. So knowing the limits and knowing and understanding the certain percentage above those limits, you could get umbrella policies that cover any excess above those current limits that your insurance has. So there are different possibilities, but again, it depends on what is suitable for your financial needs and what would be more convenient for you. I mean, I always say sometimes you are seeing the increased cost of insurance, but some insurance is always better than no insurance. So those are some things to consider. What you need to know leaving here is that if you knowing how much coverage you'll need to rebuild, and if you don't know, you want to make sure you're talking to an agent so that in case your house does burn down, you'll know if you have enough money to rebuild your house. There are different ways that you can reduce your rates, and that can be by increasing your deductible. I'll also be sharing it in the next couple slides, other ways that you can utilize as a vehicle to save on your insurance, home insurance costs. Now, as many of you have heard, the California FAIR Plan. Now, it's important to note a few things. Number one, this is not a government ran policy. This FAIR Plan is not a state agency, nor is it a public entity. There is no public or taxpayer funding going into this plan. It is a fire insured pool comprised of insurance license insurers that come together in a pool to really cover property and casualty business in California. So it was designed to be the last resort of insurance. Unfortunately, maybe a lot of you are experiencing it's currently with the crossroads that we are with our insurance industry right now. It tends to be your only or first choice of insurance. And so there are currently right now a strategy that the commissioner has come up with. I won't go too into depth. That's a whole separate presentation, but the sustainable insurance strategy is a vehicle that the commissioner has worked diligently with different partners to really help mitigate and help bring a more resilient and more resilient market, insurance market. So you'll hear a lot of the strategies, and I'll tap a little more in future slides to come. But one of the things to note is that this coverage really is just a standardized coverage that only covers a fire. So it doesn't have the liability components as your traditional homeowners insurance policy does. So you would have to get additional lines or surplus lines to cover all your other needs for homeowners insurance. It is a coverage is limited to 20 million for location currently right now, and it is difference. There is a difference in terms of your homeowner's insurance, of course. So it's important that you're looking at both so you understand the traditional and understand what this is covering, and also the maximized limits. The downfall with the California Fair Plan is that it is more expensive and you don't get as much for coverage. So we always encourage folks to hop onto our website where you're able to actually look and search for insurance companies, lines of insurance, and for the type of coverages they offer as well. So that is another resource that you can utilize. It was intended to be really a temporary safety net, but of course, it has become the primary safety net for a lot of homes, especially those that lived in high risk and high risk fire areas. So the now transitioning over to the risk, reducing the risk through prevention and mitigation. So the Safer from Wildfires is actually one of the components of the sustainable insurance strategy that the commissioner has come up with. And it was really the Department of Insurance, led by the commissioner, who worked with state emergency response and preparedness agencies, including CAL FIRE and the Government Office of Emergency Services. And essentially what they did is they created a list of actions that you as a homeowner can take to protect yourself from wildfires. And that's why it was called from Safer from Wildfires. Now, this particular component of the strategy is intended to really help mitigate and protect your home. Some of the components of that is a ground up approach to wildfire resilience with 3 layers of protection. And so one of them is being the structure, the immediate surrounding, and the community, right? Following these achievable steps that can help you save money on your insurance. So part of the strategy includes really having insurance companies recognize your mitigation and encouraging them to give discounts. So that is part of the strategy, that if you have mitigated your home, that they are giving discounts. The California Fair Plan has been giving discounts as of August. So it's important to really look at what those. Now, there are 3 steps under this framework, and it begins with protecting the structure, of course. So this means giving you specific things to do to ensure that your roof, your walls, your vents, and windows are upgraded to be safer from wildfires. And there are specifications like a roof top A rated so that it can help you. So there are specifications. I will leave the links to those. All that can be found on our website. The next one is protecting your backyard and your decks and outer buildings. And finally, number 3 is, including what number 2 is, clearing from brush areas, making sure your surroundings are clear, especially your structure, from anything that is flammable. Of course, that's part of the mitigation. And lastly, number 3 is where you actually involve your entire community to be protected. So, what makes a fire-wise community is crucial, because you're not only saying, "Hey, I meet the general state standards that say that I'm safe from wildfires," but now my whole community is. So, and what classifies a community is when you include about 10 homes or more. So that's what classifies a community safer with this new framework. And it does include diverse uh, government entities into it. So fire planning, and state agencies or departments, local agencies that contribute to really looking at what you're doing and making sure that everybody's meeting the standards and giving you certification for that, which helps when you're searching for insurance. Because as soon as we're looking at the sustainable insurance strategy will be implemented, or at least the basis of it will be set by the end of this year, and looking forward to the following year for implementation. And so once that's done, when insurance companies are going to be looking, part of their requirement is that they do insure about 85% of wildfire areas of their market share. So that means that they're going to be looking at homes that are mitigated, that are already classified safer from wildfires. And that's because the risk of a fire drops down to a lower number. So you're going to be the homes that they're going to be looking at to when they're looking to insure. So neighborhoods essentially are forming into fire-wise communities and be certified as a fire risk reduction community. So that's something you can look at to help minimize and bring down the cost. Now let's go into renters insurance. So renters insurance is a type of coverage that protects you and your belongings when you're renting a place. It typically includes 3 main components. That's personal property coverage, liability, and additional living expenses. Now, for personal property coverage, this really just covers your belongings. It's your furniture, your electronics, your clothing. If they're damaged, if they're stolen, destroyed due to covered events such as fire, theft, vandalism. It, of course, doesn't cover the dwelling itself, because it's only for renters. In terms of liability coverage, this offers protections if you're found legally responsible for an injury to other people or damage to their property. So an example is if someone slips and falls in your apartment, your policy can help you cover some medical and legal expenses as well. Some additional living expenses that it does cover if you rent a home and you become uninhabitable due to like a covered event like a fire and you're no longer able to live in your unit. An ALE can help you pay for temporary living expenses such as hotels, bills, and meals. So renters insurance is often relatively inexpensive, especially compared to homeowners insurance. It's a good idea to have an inventory of your belongings and consider the coverage limits if you might need them. And also remember, it does not cover the structure or building, as I mentioned. This usually just is covered by your landlord's insurance. We do have what we call an inventory guide, which you can actually take inventory of everything you need. It really gives you a breakdown of how you do it. I actually have that. We have that available on our website. and I'll be covering that again. The next thing you want to take a look at is flood insurance. Flood insurance is a specific type of coverage that protects your property and belongings against damage caused by flooding. So standard renters or homeowner insurance policies usually don't cover flood damage, which is why getting a separate flood insurance policy can be crucial especially if you live in a area that's prone to flooding. So the breakdown for flood insurance and what it typically covers, it's the building, personal property. It's really what it covers. This can cover the physical structure of your home. So if you own it and its foundations, the electrical and plumbing system, HVAC equipment, appliances, and flooring. So this is what it will cover. In terms of personal property, what it covers, it protects your belongings such as clothing, furniture, electronics, and other personal items from flood damage. It is important to note that when you are looking for flood insurance or trying to obtain coverage, there is usually a 30-day waiting period from the date of purchase before the flood insurance policy becomes into effect. So it's important to note that if you get flood insurance today, and a flood happens 2 weeks from now, let's say, hypothetically, your flood policy wouldn't be into effect because there is that 30-day waiting period. So it wouldn't be effective until 30 days later. Some of the exclusions that are incumbent in the flood insurance, generally, it doesn't cover damage to your car, doesn't cover temporary housing costs or any damage caused by moisture, mildew, mold that could have been avoided by property owner. And then flood insurance can typically be purchased through the National Flood Insurance Program or private insurers. Prices can vary based on your location and the risk level of flooding in your area. So we encourage you to really shop around, get different quotes. The ideal number is 3. So keeping that in mind. Next thing we have is automobile insurance, which is mandated by the state to have, and if you are driving a vehicle here in the state of California, and this typically covers and protects your financially in the event of an accident, a theft, or damage involving your vehicle. There are some key components of automobile insurance. We have liability coverage, which is what's mandated, right? And this really typically just covers associated with injuries or damages to other people and other people's properties. If you're at fault of an accident, it usually includes what we call bodily injury liability. And this covers usually medical expenses, lost wages, legal fees, if you are responsible for an accident that has injuries involved. Property damage liability is another component of the umbrella of liability coverage. And this typically pays for damages that you cause to another person's property, such as their car or a fence. This liability coverage does not cover anything or any damages done to your personal damages. So this is really typically the difference between liability coverage and a lot of you've heard typically the term full coverage. So that tends to be the two terminologies you tend to hear. When you do have full coverage, that typically gives you collision coverage. This covers the cost of repairing and replacing the car if it's damaged in a collision, regardless of whose fault it is. And with full coverage, obviously it covers both yours and theirs. With liability, it only covers theirs. Comprehensive coverage, this really just covers the damage to your vehicle caused by a non-collision event. So such as a theft, vandalism, natural disasters are hitting an animal. And this is only under a full coverage policy. It's not a liability. Then we also have the personal injury protection, known as a PIP. It's a no-fault insurance. This covers medical expenses and some cases lost wages and other related costs for you and your passengers, regardless of fault. And this is, again, under full coverage. Uninsured and underinsured motorist coverage. This protects you if you're involved in an accident with a driver who either doesn't have insurance or whose insurance is insufficient to cover the damages. So either they don't have enough coverages to cover you. And then we have, and this again is only under full coverage. Medical payments, and this covers medical expenses for you and your passengers, regardless of whose fault. Premiums for automobile insurance are really based on the factors, including your driving record, age, location, type of vehicle, the level of coverages that you choose, how much are you driving. There are really specific aspects of automobile insurance. So when you're considering the things you want to look at is what you're being covered for and what your actual needs are. One of the biggest things to note is that effective January 1st of 2025, the minimum limits required for liability are going up. So currently, your bodily injury and death per person was 15. So it's 1535, 15,000, 30,000, and 5,000. And that's per person, per accident, bodily injury, and then property damage is 5,000. Beginning January, you're looking at 30,000 for bodily injury per person, 60,000 for bodily injury per accident, and then 15,000 for property damage per accident. If you have full coverage, you probably don't have to worry about these increases because you probably more than likely already have more than these limits. It's really if you are at the bare bones with liability is when you're going to be looking at these increases. But not to worry, I have good news. If you have a vehicle that is, and this is a low-cost auto insurance program that the state sponsors. We don't offer it, as I mentioned, but we do support. It came through legislation. It's been around since 1991, believe it or not. This is a low-cost auto insurance. You do have to meet some income guidelines. But most importantly, some of the important things to note is your vehicle does have to be valued less than $25,000. You do have to have a valid driver's license. You are required to maintain a good driving record. They look at your past 3 years of driving record. They do consider it a good driving record if you have up to 2 points on your record, no more than that. Unfortunately, no DUIs. And if you are a recipient of either CalFresh, CalWorks, Medi-Cal, Medicaid, pension, Social Security, California Lifeline, any of those programs, if you're enrolled in any of those state or county programs, you automatically qualify as long as you meet the other guidelines. And essentially, the average fee that I've seen based on the feedback I've gotten from consumers is that they've paid an average of $25 a month for this liability coverage. This is only liability. It's not full coverage, but it does help those that are in the extreme ends of, looking at they need to drive, but they can't afford the insurance that currently full coverage or anything like that, but they do need to meet the state requirement. The way you go about applying for this is calling the number that's listed on this slide, which is the 1-800-602-8861. And or you can go to mylowcostauto.com and they will be able to assist you with the qualification process. As long as you bring proof that you are a beneficiary of some of the benefits that I mentioned, they'll go ahead and give you a quote, and then you can decide if you want to move forward. Now, as our department, we do have a lot of resources that are available to you as a consumer. As I mentioned, you can call our department if you have any questions. If you need assistance or have any concerns as it relates to an insurer, or maybe you don't know how to process a claim, or maybe you processed a claim and you're getting denied, I definitely encourage you to call our department, have one of their specialists look into your policies, look into your claims, making sure that you are getting a fair share of return and getting definitely what you're paying for. So when in doubt, please call our department. Worst case scenario, you find out that everything is within regulation and you're good to go. You have really nothing to lose. It's all free. We don't charge. So encourage folks to take advantage. We do offer a lot of informational guides on the different lines of insurance on our website. If you go under the consumer tab, go under informational guides, you can find a wealth of information on, residential property claims. The home inventory guide that I mentioned is on there as well. We have guides that will talk to you about how not to get scammed after a disaster. You'd be surprised how many people get scammed right after a disaster. And, it's something that we don't think about. Oftentimes, folks, after a traumatic event like that, you're in a very vulnerable state. All you want to do is rebuild and get back to life, to normal, and go back to normality. And unfortunately, there's a lot of bad actors that actually go after your insurance money. They'll give you promises. They're not licensed to build or construct in the state. And oftentimes they'll run off with their money and won't even rebuild. So those are things to really look at. We do have 10 tips for finding homeowners insurance. So if you are experiencing either a cancellation or if you've received a notification, the first thing to do is call our department. Because I will tell you this, I was recently at another presentation, just giving a fraud scam prevention to our seniors. And there was a lady that called, said she was helping her mother-in-law with her insurance because she had gotten a cancellation. She knew to call our department. And so she said she called the department, and just in 2 weeks, she got assigned a case number and an agent who was helping them, a specialist who helped them. And she said just a few weeks later, she gets a call from the company, from the insurer saying, hey, we want to reinstate you. And so oftentimes we can't force them to underwrite and cover you. But oftentimes insurance companies don't want us poking our noses in their business as a government agency. And sometimes the headache of us looking into it for them is not worth. So they'll sometimes reinstate your policy. So it's not guaranteed, but it's always worth the time to take that extra step in order to help keep your coverage. Our website is available. We do have an insurance finder tool. You can enter your zip code. It will list all the insurance companies and agents and brokers that are writing policies in your area. We do also have an annual consumer complaint study, which you can also find on our website, and it does rank them based on the complaints that they've received. And it'll let you know whether the report was justifiable. And there's just a lot of resources available for you at your fingertips, and it's all free. The other thing we do have is a senior resource portal that we have available for our seniors. It's intended to be a one-stop shop, really for our seniors to get, and it's really what's available statewide. We also have guides, driving for seniors, how to keep your driver license past 70, some of the things that you can look forward to, taking those preventative steps that you'll need, or just a wealth of information that's available to you. And that pretty much concludes my presentation. I'm going to hand it back.
Well, thank you, Brenda. I actually have a few questions of my own, but I also invite our audience to submit questions in the comments section that you should be able to see there online. One of them, you were talking, you raised the issue of covered peril earlier in your presentation. So is it fair to say that people have some ability to choose what kind of peril they want to have covered when they're applying for insurance?
Yes, you do have a choice of what you want covered, what are the amounts that you want covered. And of course, the only limitations will be unless that you have if you have a homeowner's insurance, let's say a home, and you're paying off to a financial institution, if the financial institution is requiring those things, then that's probably where you'll be limited. But for the most part, it is up to you what you want.
I see we have a question from one of our viewers. It says, how do I get non-owned motor insurance? I'm not sure. What do you mean by non-owned, sir? Hopefully he'll give us a more specific definition. Could you tell us what umbrella coverage is? That's always something I'm curious about.
What it is?
Yes.
So it's really just it's really what it is, right? So it's a coverage. So let's give you an example. Let's say that you own a business and you have maybe the insurance company who you went through only gives a maximized coverage of $100,000. Let's just say, for the sake of this example. And the type of business you conduct, maybe you're trucking and you're like, 100,000 is not enough to cover even to replace my truck. So therefore, in order for you to really be able to replace and continue your business as usual, some folks, what they do is they get what we call the umbrella insurance. And what it does is that it covers whatever exceeds the 100,000, and you determine what that is.
Okay. So it's beyond what the standard coverage limits might be.
Yeah.
All right. So our viewer says that he doesn't own a car, but he does rent one. So I guess the question is, does he have to get automobile insurance even if he doesn't own his own vehicle?
Well, typically the the car rentals will require you to have those insurances in place.
So usually though, when I apply for insurance, they want to know what kind of car I'm driving, how many miles, what I drive it for. How does somebody who's only using a vehicle on a casual basis make that kind of a presentation to the automobile insurer?
My understanding is you're only able to get insurance for a vehicle you're owning. Now, unless it's through a business that's a rental, then you're able to get insurance through there. I'm not sure I'm understanding the question completely.
All I can tell you is what I have from the viewer. It says, how do I get non-owned motor insurance? I don't own a car. I rent a car. So if I understand correctly, you're saying that the rental agencies would require the driver to have their own coverage. But ordinarily, the car insurance companies aren't issuing insurance to somebody unless they own a vehicle. So it sounds like he's kind of stuck in the middle there.
I would, just because this is a new, because I'm starting to understand. So like there are apps that rent their vehicles for you to drive.
Yes.
In that sense. I would actually speak to an agent about that to get more specifications, because that is actually something I haven't looked at. And there may be something out there now.
So there are companies like Turo, I think is one, Turo, and there are other ones where you can borrow a car to drive. You don't have to own it to use it. It says he drives his friend's car, so presumably those people have to have those vehicles insured.
And so typically, so for example, if I'm going to let someone borrow my car like consistently, then I would want to have them in my insurance policy.
You add them as an authorized driver of your
Yes.
vehicle. Yes. Okay. Let's see here. Do the automobile insurers or other insurers consider the insurance applicant's credit rating in setting rates?
No.
Okay, so that's not an issue in California.
No, they're not allowed to.
Let's see. Are there benefits to older drivers getting training with regards to what they're paying for car insurance?
What was that again?
Are there benefits for older drivers getting, like, for example, AAA offers senior driver training? Does that help with car insurance premiums?
It will depend on the insurer that you're going through. So, for example, AAA, they do take into account. Allstate does as well, right? They have for the younger adults, they have a training that they can take. They pay for the training, but then in turn they give them a discount that's, I think, active for another 5 years or whatnot. So it is beneficial if you're intending to be with a particular provider and they're offering you those discounts.
Because I know you mentioned earlier that for people who are over 70 years old, for example, who want to keep driving, there are some resources that the Department of Insurance provides.
We have a one-pager that gives them just kind of like things to prepare for when they're going to go into renewal.
Okay.
But yes, there are some courses that actually the DMV offers.
Okay. Earlier, when we were back talking about homeowners insurance, I think you talked about, earth movement is not covered. So would that be, for example, the homeowners in Ranchos Palos Verdes who are having that catastrophic earth movement there?
Yeah, very unfortunate. I've been out there. So we also do emergency response. We help with answering questions and at times filing claims. I was invited by the Office of Emergency that the county was putting together sort of this, one-stop resource. And it's very unfortunate because there isn't an insurer out there that is actually covering land movement. So unfortunately, there's absolutely nothing that we can do for them because no one is covering that risk.
So with regard to that kind of thing, is there guidance people have? So if they want to assess in advance of purchasing a residence, what kind of fire risk they might have? I'm assuming earthquake is going to be difficult because we don't predict earthquakes that well, but flood insurance, coverage or earth movement, there are things that consumers can do in advance to try to assess the kind of risk they're confronting if they're going to purchase a residence.
Absolutely. You can go, if you go onto the floodsmart.gov website, you can actually go in and put in the zip codes. Like, let's say you're looking into purchasing a home and find out what the flood risks are in those areas. Definitely do your research in terms of, is it considered a high risk, fire risk area? See if what traditionally in the past has occurred in the area. I mean, you can't fully vet everything 100% because, quite frankly, the climate is changing. The disasters that we're experiencing are a lot different than we have experienced historically. So really, you can't 100%, but you can definitely get an idea of what is the location you're going into and take those preemptive steps to avoid being stuck in a place where there's no coverage for certain things. Same thing for mudslides.
Oh, yes. Because
mudslides. And
after fires, we often have mudslides that
yeah,
follow. Okay.
but let's say the mudslides happen because it's raining and it's flooding. Now that's a different thing. It may fall under flood, right? So there are very peculiar things that you can pinpoint that can default to, but that's why it's so important. It's so complex at times, and this why it's so important that you call our department, and get those and get the response so that 100%.
I know that I can personally attest to some of the resources at the department's website. I had been paying by the mile for my insurance because I usually use public transportation to get to work. But then I guess most of the insurance companies, automobiles, they got approval to increase their rates earlier this year. And so they were going to be charging me about as much as I was going to get for just a run-of-the-mill policy. And I went on the Department of Insurance's website, and they have a list of California automobile insurers and what their roughly average rates might be. And that was very helpful in me being able to get a good price for my car insurance. So I can tell the public that's actually something you can take advantage of.
Absolutely. And it's tedious. I will tell you because I've experienced it firsthand. And I think like a lot of folks look at us and we're like, look, we're also consumers here. We work here, but we're consumers as well. And the same things you're experiencing, so are we, so we understand the devastation. We understand the impact. And I think one of the biggest things to note is that as we're experiencing those, it's tedious work, but the resources are there. Like I actually was searching for, helping my brother search for auto insurance, and I was calling. I can't even tell you how many calls I made because the quotes I was getting a month, because he's 19, was $1,000.
Yow. I can't imagine. Who's supposed to be able to do that?
And I said, oh no, we're not doing that. It was more than his car note. And so, I mean, we kept searching and searching. I said, no, I have to find something. I know there's something out there. And I kept going, and sure thing, we finally found something that was $230 a month.
Still.
So it's still up there, but way better than 1,000.
Absolutely.
So yeah.
So we're approaching the end of our hour. I'd like to invite our viewers. Anyone else who has a question, please submit it in the chat if you'd like to. Otherwise, I think we're going to bring this to an end. I want to thank Brenda Coloca for being with us today. Brenda, did you have something else you want to close with?
Yeah, I think there was a question that says, does renter's insurance cover appliances part of personal property? Yes.
Okay, I didn't see that.
Or maybe that was
just yes, okay.
Maybe that was just to me.
All right. Anyone else? All right. If not, on that note, I want to thank you for your time this afternoon. I want to thank our presenter, Brenda Coloca from the California Department of Insurance. And I hope this information has been helpful for you. Thank you all for coming here today.
Thank you.
You're very welcome.